Good morning, everybody. Happy Monday. It's November 18th, 5:27 a.m. Central Time. Grain markets are mixed this morning. December corn futures up a quarter cent at 4.24 and a quarter. January soybeans down 4 and a quarter at 9.94 and a quarter. December Chicago wheat up 4 at 5.40 and a half. December Kansas City wheat up 5 and a quarter at 5.45 and a quarter. December spring wheat is up 4 and a quarter at 5.76 and a half. Let's start off with the funds.
So the funds substantially expanded their net long position in the corn market last week. As of Tuesday, November 12th, large money managers were net buyers of 97,000 corn contracts. Despite the buying, the December 24 corn contract gained only 12 cents during the CFTC reporting week. The net long of 100,000 contracts is the largest since February 2023. Funds were net buyers of 17,000 contracts of soybeans and sellers of 18,000 contracts of SRW wheat on the week.
Big week of fund buying, which would imply to me that this was being met by farmers selling. Not only has the board improved, but basis has improved. So cash prices across the country are drastically better in some areas than they were, back in July or August or even part of September. It's big improvement. So if farmers are selling into this thing, I suppose that would make sense to me. So 100,000 contracts is not huge historically by any means, but it is a big sentiment shift. And I understand the sentiment shift. We've seen some better demand. Export sales have been fantastic. We're going to talk about that in a second. Ethanol production has been very, very strong. The balance sheets are tightening a little bit. I think there is some concern, perhaps, depending on who you talk to, about the second corn crop in Brazil. Are they going to plant on time? Could they be late because some of the soybean planting was late? There's some question marks there. So I understand it. Funds are still short soybeans and still short SRW wheat. When you combine the three, corn plus soybeans plus SRW wheat, there's a small net long because of the long in the corn market. So interesting shift in sentiment here and a lot of short covering that we've seen since July. It's just disappointing the way that the market's acted. I mean, you look at corn, which has acted the best, and it's off the lows by 40 cents, but beans are not very far removed from the August lows. Wheat could post fresh lows for the year today, for all I know. So the markets could be acting a lot better despite all of this fund buying. This is why you guys need to subscribe to the premium deal. I did a video last week regarding the funds and corn marketing and how this can all be applicable to you as a farmer. We'll do our full ad a little bit later, but that was a short version.
So China is planning to reduce or eliminate export tax rebates on various products. The proposed changes are expected to include Chinese used cooking oil, resulting in the removal of its tax rebate. Chinese used cooking oil imports for biofuel production have spiked in recent years, undercutting American farmers. Earlier this year, biofuel groups expressed concern over potential fraudulent used cooking oil imports. The changes they will go into effect on December 1st. U.S. soybean oil futures gained 2% on Friday amid prospects of greater domestic usage.
Soybean oil futures rallied on the day after the election and then rallied for a couple days and then sold off. So kind of a buy the rumor. I guess it was a buy the fact, sell the after fact type situation. Then we rallied a little bit on Friday. Here's a quote from the article. It may not really impact the amount of UCO coming in as they will just price higher, but yet below other feedstocks. There is so much room in the pricing. They can still get the big bulk business that they need, said Kent Woods, owner of advisory firm Crush Traders. He's a smart dude. I used to work in the same office as him. I don't know if there's a smarter guy when it comes to soybean crush. In any case, I guess this is positive-ish, but I think the bigger thing will be when and if Trump comes in and puts tariffs on this stuff. That's how you really stop it. I don't think that this story in itself is going to result in any major stoppage of the soybean oil imports.
The National Oilseed Processors Association released October crush data on Friday. The U.S. soybean crush climbed to an all-time high last month when NOPA members processed 199.96 million bushels. The crush was up 12.8% from September and up 5.4% compared to October of last year. The crush also exceeded the average trade estimate of 196.84 million bushels. End of month soybean oil stocks in October increased slightly to 1.07 billion pounds. Stocks were up marginally from the end of September, but down 2.7% versus year-ago stocks. Additionally, stocks fell below the average trade estimate of 1.09 billion pounds.
The chart I put together today, I did calendar year to date instead of marketing year because I think it's a little bit more just to illustrate how good the crush has been the last 10 months or so. We've been running at record levels on and off for most of the year, and we're probably going to continue to do that. So the question that people ask is, oh my gosh, we're crushing so many beans. Why can't the market rally? And it just comes down to the balance sheet. And this is a snapshot of my soybean balance sheet. And I added this percent of total demand category. So yeah, crush is the biggest piece of your demand base when it comes to soybeans grown in the United States. USDA projects that crush will account for 55.4% of all demand for soybeans grown in the United States this year. Exports, however, are projected to account for 42% of all demand for soybeans grown in the United States. And we've got problems and potential future problems there. The book of export sales isn't that great. And then you've got this whole probable trade war thing, plus the idea that Brazil's crop is going to be really big. And if you run into, if both of those things come to fruition, trade war plus big Brazilian crop, that may equal Chinese cancellations. And China, to this point, has accounted for 45% of all U.S. soybean export sales this marketing year. So despite the fact that crush has been excellent, the export piece has been soft. We've got a big crop. We've got a sizable carry-in, and that's what leaves you with this big ending stocks and kind of burdensome situation. So even though soybean crush is great, it doesn't mean the market has to be great.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our videos from last week?
20 questions with Matt Bennett. We did a mailbag video. We had 20 questions. This was a 40-minute video. Super topical grain marketing information. Lots of questions about Joe. Joe and Matt is mainly directed at Matt, I guess. What do we do with unpriced 2024 bushels? How do we capture carry? How do we sell the carry? What do we do with basis? What about 2025? There are a whole bunch of things that we discussed here at length, and this video is really fantastic. On Friday, we did our kind of fun social media circus video. I was accused of being a liberal, among all things. Now, sometimes I'm accused of being a conservative. In this instance, I was accused of being a liberal, which was funny because this comment, that the Joe is a liberal comment, came in the video we did, I think like it was Wednesday or Thursday last week.
Yeah.
And we said the video was, or episode was, is Trump really that bad for the grain markets? And in that video, I actually went through the positives and negatives of a Trump presidency. Yeah. But the implication was that I'm a liberal. We do have an agenda here, Mackenzie. It's not a political agenda though. Right. And I'm gonna read you what our agenda is, and it's super transparent. And anybody who's been listening for a while knows what our agenda is. Our agenda is 3 points that I wrote down. The first one is to provide timely, accurate grain market news, which includes premium charts and graphics. That's what we do here on YouTube and on the podcast. That's the first part. The second part of our agenda is to build our subscriber base via both podcast and YouTube on those platforms. And the third part is to convert you, our subscribers here on the free stuff, to becoming premium subscribers so that we can help you become better grain marketers. So does the agenda involve selling you something? Yeah, at the end of the day, it does. We're not working for free, but our product is super transparent. It's a piece of cake. It is what it is. We charge you $50 a month for it, and that's it. We won't try to sell you anything else. There's no upsell. There's no hidden costs. We do the best that we can here. So no, there's no political agenda. That's our agenda. If you want to know, go to standardgrain.com, sign up this morning. It's a $50 per month subscription. Cancel at any time. You'll see all of our premium videos. Our email goes out at 5 a.m. Central Time. All of my cash grain marketing recommendations are included and broken down every day by crop year and percentage. You'll know exactly where I stand on everything. Sign up this morning. I'll forward you a copy of this morning's email. Sorry that ad was long this morning, but I had to tell people, what our agenda is.
Definitely. So Summit Carbon Solutions has obtained approval for its pipeline project in North Dakota. Last week, North Dakota regulators approved a route permit for Summit's carbon pipeline. The permit was originally denied back in 2023. However, Summit made the necessary changes to gain approval. Despite the approval, Summit does not have the authority to use eminent domain in order to get easements from landowners for the project. According to Summit, 82% of the easements for the route have been secured in North Dakota. Summit will reapply for its permit in South Dakota this week, following a previous denial by the state's Public Utilities Commission.
I suppose the bigger story is not the North Dakota approval. It's probably the South Dakota vote, or not vote, but they're going to reapply this week, which I don't quite comprehend. If you guys have a better understanding of this than I do, let me know, because the voters in South Dakota shut this down, yet they're still going to reapply. So I don't quite understand exactly what's going on. I'm sure somebody watching understands. So drop it in the YouTube comments or email me at info@standardgrain.com. But that's going to be tomorrow. They're supposed to reapply.
Yep, that's correct. That's correct. Yep.
And who knows how long that takes? I mean, it could be weeks, months. I don't know.
Right. U.S. soybean export sales were disappointing last week. Net soybean sales were reported at 57 million bushels. The print was down 24% versus the previous week and also down 24% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales were near the lower end of pre-report expectations at 52 million bushels. The print was down 53% from the previous week and down 52% from the prior 4-week average. Unknown destinations were the largest corn buyer for the week. Net wheat sales were reported at 14 million bushels. The print was up 1% from the previous week, but down 17% from the prior 4-week average. South Korea was the largest wheat buyer for the week.
These sales were disappointing relative to expectations in corn and in soybeans. That being said, U.S. corn sales are fantastic. We're running 40-something% ahead of last year, and USDA is projecting that we're going to be like close to flat. This argument, we've talked about it every week, this argument or narrative that global buyers, Mexico in particular, that they're front loading their programs to get ahead of potential tariffs and trade wars and that sort of stuff. That narrative's still out there. People believe that this pace is not sustainable. But I'll tell you what, the funds are long. Somebody believes it's sustainable, I think. It just seems like everything I read and everybody I talk to says this isn't sustainable. Mexico's not just they're not going to keep buying at this sort of clip. And I don't know if that's true or not. That's the narrative though. Soybean sales have improved. We're closer to average relative to the last 10 years, probably still a little bit below average. We're not, I think we're quite where we need to be to hit USDA projections, but we're getting closer or close-ish. Wheat export sales kind of average-ish. I think USDA is going to have to come up with its wheat export number, though. It's a little bit better than it probably should be.
Rain pushed across U.S. HRW wheat country overnight. The radar is active over parts of Kansas, Texas, Oklahoma, and Missouri early this morning. Today's system follows substantial rainfall that was observed last weekend. U.S. winter wheat ratings improved last week and are likely to improve again this afternoon, given rain in both HRW and SRW wheat areas of the U.S.
So I think wheat ratings in the good to excellent category jumped like 4% last week. You should see another 4 or 5% this week would be my guess. There was a lot of rain in HRW wheat country in particular, but also in the Midwest in SRW wheat country. So I would think that that's coming this afternoon at 3 o'clock. What did cattle do last week?
So cattle futures were higher on Friday. Live cattle were 15 cents to 92 cents higher. Feeders were 207 to 402 higher. They had a big day. Cash cattle prices were weaker. In the Southern Plains, cattle sold at 185, which was $2 lower compared to the previous week. In Nebraska, cattle were $1 to $2 lower at 185, and then over in the Western Corn Belt, cattle were steady to $3 lower at 182 to 185. Box beef was lower on Friday. Choice ended the day at 303.34. That was down 46 cents. Select ended the day at 276.14. That was down 52 cents.
Outside markets mixed this morning. U.S. dollars up a little bit. Stocks are just fractionally lower. Bonds are off. Gold's up $26. Crude oil is higher as well. Up 22 cents in the crude at 67.22 in the December WTI. Have a great day, guys. We'll be back on Tuesday